Hi everyone, this is M. Kumar Sharma and you're watching Grow Shine classes. Today's topic is going to be very important for all the students of commerce, and this topic has been taken from the financial accounting actually. The name of the topic is Provision or Reserve for Doubtful Debt. What is this exactly, dear students? In normal business stores, most of the sales is on credit basis. Cash sale rupees 4 lakh and credit sale amounting to rupees 5 lakh 30,000. Hence total sales made by the company amounts to rupees 9 lakh 30,000. Out of this 5 lakh 30,000, 30,000 is the returned by the customers. Okay, that means the net credit sales amounts to rupees 5 lakh. Okay, and 4 lakh is on a cash basis. That means the net sales amounts here rupees 9 lakh. Cash sales 4 lakh, net credit sale 5 lakh, and total net sales amounts to rupees 9 lakh. Now net credit sales generates the debtors actually, and debtors are the part of accounts receivable. Debtors are part of accounts receivable, or simultaneously we can say that the debtors are the part of trade receivables. Trade receivable or account receivable means debtor plus bills receivables. If we add together bills receivable and debtor, it will be called trade receivable or accounts receivable. Accounts receivables are our assets actually. Receivables are assets of the business organization. An asset is anything which will give benefit in future, which will be beneficial in future actually. So receivables are assets. Okay, credit sales of the company is rupees 5 lakh. There is no guarantee of this 5 lakh and credit sale of rupees 5 lakh. Okay, debtors are rupees 5 lakh. So suppose we want to know that how much debtors will be shown in the trial balance. So let's say this is the transaction of 2023 22-23. Okay, during the year 2022-23 we noticed that our sales as our credit sale has been done up to 5 lakh. Okay, so in the trial balance debtor will appear at rupees 5 lakh. Okay, debtor at rupees 5 lakh on 31st March 2023. It is expected that the some part of these debtors will be irrecoverable in next financial year. In the next financial year, our lots of debtors will not be able to pay us our amount. That means the some part of this total debtor 5 lakh rupees going to be bad debt in the next coming financial year. Let 6% of the debtor may be irrecoverable in the next financial year. Okay, 2023-24, in the next financial year, some part of this 5 lakh will be irrecoverable. So that's why company has to make reserve for doubtful debt or provision for bad debt regarding such debtors who will not be proved as a good for us actually. Now let's learn what journal entry is made and what is provision for bad debt, doubtful debt exactly. So here for this business is rupees 30,000. How does this 30,000 come? This is a 5% of 5 lakh rupees. And this is the 6%. How does this 30,000 comes? It's the 6% of this 5 lakh rupees. Okay, this is expected bad debt. And we are just going to make a reserve for doubtful debt or provision for bad debt. This is an anticipated loss or expected loss which is supposed to arise in the next financial year, and future losses must be recorded in present as per the concept of conservatism or concept of prudence. So future expected losses must be recorded in advance in the present, whereas future gains profit must not be recorded in present. Okay, now next comes, now question arises, what journal entry will be made for making reserve for doubtful debt. Okay, So here we consider the 6% of 5 lakh rupees, that comes 30,000. We will have to do a journal entry, profit and loss account debit. Actually, this is an adjusting entry actually. This entry is done after closing trial balance. After closing trial balance on 31st March 2023, we will make this adjusting entry. This is adjustment entry actually. And then we make entry profit while making a final account, trading and profit and loss account. This is necessary to make this particular entry profit and loss account debited to reserve for doubtful debt. And this is reserve for doubtful debt is our liability. We can say the liability is credited if created. Okay. And all loss and expenses are debited to profit and loss accounts. So that's why we made an entry here, profit and loss account debited to reserve for doubtful debt rupees 30,000. Now on 31st March 2023, we will show all this in our balance sheet. So in our balance sheet, we are showing our debtors rupees 5 lakh less 6% reserve for doubtful debt. 6% of this comes here 30,000, 4 lakh 70,000. Or we can show that since reserve for doubtful debt is a current liability, it's a liability, so liability can be shown on the liability side and debtors can be shown on the asset side. It was all about actually, balance sheet, journal entry for making reserve for doubtful debt. Now, if we want to see that how ledger account will be appeared in the books after making trial balance, again we are making debtor account. Debtor is to sales 5 lakh, by balance CD 5 lakh, no problem. And reserve for doubtful debt recently has been created. So it was created with the help of by profit and loss account. It's having a credit balance on the debit side to balance CD. Simultaneously in profit and loss account on the debit side, we will show to reserve for doubtful debt rupees 30,000. So this is over for the year 2022-23. Okay, no bad debt is taking place, but bad debt is expected in next coming financial year actually. So we will discuss how provision for bad debt will be tackled in 2023-24. So next financial year, now it has come. This is the next financial year. It has come in the existence, and now actually when bad debt actually takes place, let our debtor of rupees 12,000 is proved as a bad debt. Actually, last year we were having an imagination actually, but this year this is reality that in actual debtors of rupees 12,000 have been written off as a bad debt. This is not a good news for the business organization. So all losses expenses are debited if created. All losses expenses are debited if raised. So bad debt account debited to debtor goes debtor. This is our asset. Asset is decreasing. Asset decreases if they are credited. So assets have all the assets have debit balance actually. That's why if your assets is decreasing, that means the asset account will be credited. Hence we have done entry all also expenses are debited and bad debt account debited to debtor account rupees 12,000. This is the actual bad debt taking place. Now we can see that how this debtor account will be affected by this bad debt. So we are again making a debtor account on 31st March 2024 before making any trial balance here. Since to balance BD from the last year, it was the balance BD to balance BD rupees 5 lakh and by bad debt rupees 12,000. Yes, recently bad debt has taken place by bad debt 12,000. Now the remaining debtors are 4 lakh 88,000. Okay. Now bad debt account will be debited. Obviously bad debt ledger account is just appearing like this. On the debit side we are supposed to do to debtor. It was the creation of the bad debt and by balance CD. If we want to make here provision for bad debt, that will be maintained likewise. This is provision provision for bad debt is reserve for doubtful debt. Doubtful debt. And reserve was by balance BD. It has been taken from the previous trial balance. It was, I think, 30,000. Okay. On the debit side, you are supposed to write to balance CD. This is 30,000. This is appearing on 31st March. This is appearing on 31st March actually. 31st March 2024. And this balance will be shown in the trial balance. So bad debt, debtor balance 4,88,000. Bad debt balance rupees 12,000, and reserve for doubtful debt will appear in the trial balance. How will this appear in the trial balance? Let us see. All these will be shown in the trial balance. Debtor rupees 4,88,000, bad debt rupees 12,000, and provision for reserve for doubtful debt rupees 30,000. So this is the trial balance. Now let us see, on 31st March 2024 we will have to deal with some adjustments also. So adjustments are, adjustment on 31st March 2024 you are given here, further bad debt is given rupees 8,000. Now so this is the bad debt, okay, this is recorded bad debt actually. It has already decreased the debtors, and debtors after subtracting bad debt amounts to rupees 4,88,000. Okay, but this further bad debt is in the adjustment. This is not yet recorded actually. These 8,000 included in this debtor actually, which are supposed to be subtracted from this 4,88,000. So you will have to and the second adjustment is a new provision for bad debt is to be 10% on debtors, or new reserve for doubtful debt is to be 10% on debtors actually. So this is, I think, the new provision decided by the business organization. So adjustment journal entry will be done after making trial balance, and first of all this entry will be done. Bad debt account debited to debtor 8,000. These are new bad debts recently noticed. Formerly were not recorded in the books, but now we are recording since it is given in the adjustment. So definitely our debtors are getting down. Okay, so the matter comes here, then how to show actually all these matter in trading and profit and loss account. This is the first bad debt account debited to debtor account. Next entry is supposed to be done reserve for doubtful debt account debited, and this is going to be 8,000 plus recorded bad debt, that is 12,000. So this means this is not to be written likewise this, but you can just, I'm just for your explanation, I'm just writing in the different amounts, 8,000 plus 12,000. You will have to write in the examination directly 20,000. So this is to bad debt, and this comes here 20,000. Okay, in the debit and credit bad debt. Okay, thereafter it is also given that new provision for bad debt is going to be readjusted. New provision for bad debt is going to be readjusted. For that you will have to make an entry there, a profit and loss account debited to reserve for doubtful debt. But it is not so easy to find out this particular amount actually. For finding out this amount, student will have to go to balance sheet actually. And in the balance sheet, we will just record this on the asset side. Here it is, I think debtors were rupees, formerly debtors were rupees 5 lakh. Then there will be less bad debt. Bad debt was rupees, I think it was 12,000. This is the history of the debtor actually. This is the balance sheet. This is the history of the debtors. Debtors 5 lakh minus bad debt 12,000 minus further bad debt rupees 8,000. Then we are just getting debtor here 4,80,000. Okay, 4,80,000, and 10% of this is going to be new provision for bad debt. As mentioned in the new provision for bad debt is to be 10% on the debtor. Okay, that means 10% of this is less new reserve for doubtful debt, reserve for DD. It is 10%, that is 48,000. Okay, and rest and balance amount will be, I think, debtor 4,32,000. 4,32,000. It is appearable in the balance sheet. Now the entry which we were requiring to do. Now the amount of new provision for bad debt is going to be raised. Okay, this is to be 48,000. New provision for bad debt is going to be 48,000. If you want to know by what amount this new provision for bad debt is just being created, then we'll have to make a provision for bad debt, provision or reserve for DD, doubtful debt. Last year its balance BD was, by balance BD, it was, I think, 30,000. That was 6% of 5 lakh in the previous year. It was created. And to balance CD, this is the new balance going to be 48,000 actually. 48,000. And reserve for doubtful debt account debited by rupees 20,000. So on the debit side to bad debt is to bad debt rupees 20,000. Okay, so your balancing figure is coming on the credit side. That means the new provision for bad debt is supposed to be 48,000. Okay, to be 48,000, but current provision might be considered 30,000 minus 20,000. That means only 10,000. So rest 38,000 we will have to make new provision by profit and loss account. This is coming 68,000 and this is coming 68,000. That means business will have to make provision for doubtful debt by rupees 38,000. Yes. So provision for bad debt is to be increased by 38,000 and new provision for bad debt will be 48,000. It's not necessary to make this account, but it is better if a student understand this matter. While making final account, there's another way to solve this particular. You can see over here. In the profit and loss account, we can directly find out this amount. In the profit and loss account 2023-24, on the debit side we can write to bad debt. We can write to bad debt rupees 12,000 plus add further bad debt. Further bad debt is 8,000. Okay. And then add new reserve for DD, new reserve for doubtful debt, rupees 48,000. Okay, so this comes here 56, 66, 68,000. This comes 68,000 less old provision for bad debt. It was, I think, 30,000. Okay, so here your answer comes as profit and loss account going to be debited by rupees 38,000. Okay, so we can do in this way too. Either do in this way 38,000 or do in this way 38,000. Both are same. But this requires accounting knowledge and this is a rough work. And if you haven't yet subscribed the channel, please do subscribe the channel and share like the video and hit the bell icon so that you'll be getting notifications on time. This was all about reserve for doubtful debt, provision for bad debt, further bad debt, balance sheet, show trial balance, etc. Next video is coming to you regarding various types of journal entries. Till then, take care. Bye bye.